Good, good evening. Long time for some of you probably. Let me just first clarify in case you're wondering or you've known of me. This is Paul Lang that was with Pristine for many years. And Pristine about 2 years ago, was absorbed by T3. I was there 3, 4 months, and most of the people from Pristine were gone in 3, 4 months, except for Sammy, who's still there. I just kind of took a year off, goofed around for a while, did a couple things, and finally decided to start my own company. Really kind of miss doing this, and I plan on doing this for maybe about 4 years or so, and that's going to be it for me. But so far, I started up just at the end of August and having just a really great time. So I won't take too much of your time here tonight. I probably will be done inside of an hour, unless you guys have a lot of questions you want to talk about. And I want to take a good look at the market because a lot of things always aggravate me when I hear things on TV and listen to things and listen to traders talk. And it's really, not all that complicated in a lot of ways. So I'm going to run through. Let's take a look at the outline for tonight. What I'm going to do is talk about where the market is going in definite terms. You saw probably on the advertisement, it always kind of drive for this presentation night. It always kind of drives me crazy when I see people talking about the market, and they have you ever heard that they'll talk for 5, 6, 2, 3 minutes, whatever it is, and when they're all done talking, you don't have a clue what they said. The market has been in a very strong trend, and we're concerned about the upcoming FOMC meetings, and if that brings some selling, then we could see a pullback in the short term. And you're just left wondering what you're supposed to do. There are times where you do have to wait and see what the market was to do, but for the most part, most of the time frames are pretty clear, and they are right now as well. So we're going to talk about what the market's doing, and if you are just tuned in for that, after about 10 or 15 minutes, you could probably leave if you want to. I'm going to talk about the reasons why the market does what it does, because there's a huge misconception. I've been doing this for a long time. It's very clear to me what causes price movement without a doubt. It's not clear to everyone. There's certainly some argument about it. To me, there's no doubt about it. I'm going to talk then about intraday analysis because it's even easier to predict and to understand. And I'm going to take the last few minutes talking about one of the taglines that you saw for the email you had for this presentation night, which is what you should never do with your money, or really the converse of that kind of is if you want to be in the market, what you should do other than give your money to a mutual fund. And that's going to be kind of a shocking couple of minutes if you haven't heard that before. And it says, warning, leave by 5:25. I'm just going to go through and talk about the market. You've seen the email. You know my company name. You can visit it if you want to. At the last 5 minutes or whenever I'm done, I'll make a big break and say, okay, I'm done. And now anybody wants to ask me about what I do or what I've been doing the last 2, 3 weeks of my company, I'll go over that at that point if you want to. Also, right before I do that, though, I do want to invite you to something that's going to be tomorrow. I'm teaching a half-day class that I'm inviting the public to. So you're invited to attend that. If you just need to sign up on my site, just an email, nothing else, and you'll get an invite tomorrow morning to the class tomorrow afternoon from 12:30 to 4:30 if you want to attend. Okay, so let's take a look. Where's the market going? In no uncertain terms. First of all, when you talk about where the market is going, you have to talk about what time frame you're talking about because everybody has a different perspective of what a time frame is. The letter that I put out every morning always has this on it, and this is little sliding scales of the intraday outlook, which is what the market looks like that day, that trading day coming up. The market, this letter goes out at 8 o'clock in the morning. The midterm outlook and says the next several days. What are we expecting the daily chart to do over the next several days? And then the long-term outlook. Now the long-term outlook is the big outlook. It is the monthly charts, the weekly charts, the next several weeks to several months. It's answering the question, are we heading for another 2001, 2008 in the immediate future? Okay. Naturally, we are heading for another 2008. That's what the market does. It always does that. The question is, when's it going to do it? Because most traders exit the market for fear of it crashing about 2 to 3 years before it crashes, and they miss the best part of the move. True? I see you're kind of a quiet group. is that true? Even when you look at many of the people on TV, they will tell you the market's at a top about 2 years early, if you notice, about 2 years off, and that's often the best part of the move. And that's been true of the last 2 years. How many times have you heard in the last 2 years the market is done? I'm going to get into that in just a minute. So this scale is off the letter from today, and it shows everything is bullish, bullish, bullish. The long-term outlook, that scale there, has been bullish since I started the letter. It's been bullish for as long as I can remember. It's been bullish for 10 years. The long-term outlook has been bullish for 10 years, and it has not changed. If you want your quick answer, there is no top in place yet. A lot of times people don't understand when I talk about the market and I talk about different time frames, they get confused. Sometimes I may say, okay, the long term is bullish, it has been, and then the daily chart drops for 4 days. I get an email, what are you talking about? You're crazy, we're falling like a rock. Well, you have to keep your time frames in place. The long-term outlook is, are we in another 2001? Not that we drop 4 days. Yes, prices will go up and down. And that's a separate analysis to look at the daily chart and say where are things going. And that's been a very interesting analysis. I'm going to pull up a chart in a minute. And we're going to take a look at the big controversy that occurred a couple weeks ago. And it was a big enough controversy that I had to kind of wait and see which way things were going. And in the midterm, not in the long term, that's bullish. The day-to-day changes every day. Now, the other thing is, how often do these time frames change? How often do you change your view of these time frames? Well, the long-term outlook doesn't change. I mean, it changes rarely. It changes every few years. You don't all of a sudden one day say, well, I'm bullish for the next 10 years, and then you say, well, okay, maybe I'm bearish this week. That's not what we're talking about. We're talking about a long-term outlook that changes rarely. The mid-term outlook can change every few days. It could change day to day sometimes in a certain area, and it runs for a certain number of days, and then it will change. It's supposed to. The daily charts kind of go up and down, even if prices are moving up or moving down in the big picture. Does this make sense, everybody? Make sense? So you have to define the time frame you're discussing when you say things are bullish, bearish, or whatever they are, or you can't be wrong, you can't be right. I just want to bring up, I appeared 2 years ago at the Miami Financial Festival. It's kind of hard to say. November 6th and 7th. It'll be just about 2 years ago. And I was invited to be on a panel of 3 people to discuss the market at the time. And it was kind of an interesting, unprepared, unrehearsed thing. I don't suppose anybody was there. It was kind of a big deal. There was a lot of advertisement. These talks were published, and they were at least on the internet. I don't know if any made cable stations or not. But what was interesting to me is that I went last in the group of the 3. And they were smart, good guys, and they're just kind of saying the normal thing. At the time we did this talk, there was an FOMC meeting coming up. There was all the talk, it was all the rage, because there was concern we're going to raise interest rates, and that would put a crimp in the market. The market, 2 years ago, it just quadrupled, tripled, whatever it was at that point. And all the talk was, we're at the top, things are going to crash, et cetera, et cetera. Well, person 1 went and talked and kind of said blah 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 FOMC, I'm scared, and person 2 blah 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 FOMC, I'm scared. And since this was unrehearsed and I didn't know what they were going to say, I was a little taken back because I just said what I was going to say, which was the FOMC has nothing to do with this at all. It has nothing to do with anything. As a matter of fact, an interest rate hike would be welcomed by the market because it's not afraid of inflation. It's afraid that we're going to fall right off the cliff and the other way in terms of being in a near depression. And the fact of it is the charts will tell you what's going on. There are so many times that, you look back to the 1990s, and it's amazing that people still talk about being afraid of interest rates. Yes, I understand. In college, we're all told about interest rates and macroeconomics, and higher rates mean that money's attracted to the bond market and it's harder for companies to make money. But you know what? It doesn't play out in real life, and it hasn't for 2 decades, yet people still talk about it, right? The 1990s was one of the greatest increases in interest rates in history in the FOMC rate, the way they raised rates. It was also mirrored by one of, if not the greatest rallies in the market. It was the greatest rally in tech stocks. How do you account for that? You can't. And it's the same situation today, and people are worried about it. So I just boldly said that look at this line down here, I'm a bearish person by nature. You wouldn't know that. I have to remind people because you wouldn't know listening to me for the last several years, because I have been extremely bullish on the market just because that's what it is. I don't want to be. And yes, if you listen to a bearish person, they are always the smartest person in the room, and they will convince you to be bearish, and they will have everything right except where prices are going, because they're not right. Prices keep going higher. So as I explained to people at that meeting, is that and it was interesting because I was very happy with my talk because I noticed everybody kind of come back from, rather than sitting back and kind of dozing off, they got to the edge of their seat, they're asking questions, they were very curious what I had to say. And I said, sitting here right now, I'm telling you, there's no top to the market and it will not be in the foreseeable future, but that can change. I can draw a chart pattern that would tell me we're at a top, that would encompass the next 4, 5, 6 weeks. So 6 weeks from now, it's possible. If you let me draw the chart, if you let me go and draw the bars on the chart the way I wanted to, I could say there's a top in the market. But absent that, there's nothing to indicate that we are. And today, nothing has changed. So we'll take a look at some charts to actually do that. But I just wanted to indicate a couple of things that I am not a perma bull by any means. I'm a bearish person. For me to sit here and say we're still going higher, like I have for the last year, for the last 2 years, for the last literally 10 years on the big picture, it's only because of what I see clearly in front of me that we're not at a top yet. But the same warning I gave to the Miami Financial Festival is, if you don't listen to me on a regular basis, be forewarned. There could be a day in the near future where I say, hey, okay, boom, boom, boom. The long-term outlook is changing. First time in 10 years, but it's changing. Okay? Does that make sense, everybody? Can you guys hear me okay? Sound good? I love when people just jump in and say, love it, you're an idiot, whatever you have to say. But if you have any questions, whatever, can you guys hear okay? Sound good? Fine? Your typewriter work? Keyboard work good? You're good? Yeah, I know you can, Kathy. All right. All right, continuing on. I want to just show you, it's not just what I'm saying today, but this is comments from Tuesday's letter, because this is kind of a critical point. I want to talk about the daily chart a little bit of the market and explain a couple things in the next section here. But this is just the comments from the letter, close Monday, for the Tuesday morning letter. If the Q, now I look at both the Qs and the SPY to call it the market. You can chart either one you want to. I typically chart the Qs because they tend to lead 60% of the time. Most people don't agree with that, but it's true. And it really doesn't matter what you want to call the market. I put the SPY up on the chart sometimes. I put the Qs. I look at them both. When they're doing the same thing, it doesn't matter what you look at. When they're doing something different, you need to understand how they interact together. There's a big issue right now that if you notice, the last 3 days, the QQQ and the SPY are quite different. And that could lead to be a little bit of a problem. The QQQ is an ETF. It's just a short for a group of stocks that represent, it's called an ETF, the NASDAQ 100, and the SPY represents the S&P 500. A very quick way to look at them. And we're actually going to talk about them more in the very last section tonight. But it says if the QQQ gaps above 146.20 and stays above that after 10:10 in the morning, or if it trades above that number and then makes a new high after 10:10, the market is higher on all time frames. For the midterm and long-term swing and core confirmation, look at a close near the high of the day. If these conditions are met, I'm rating this as 90% probability of a new leg up in the market. By the way, I only feel there's a typo there. I do a lot of typos. There's only a 91% chance the sun will rise tomorrow. So it's hard to say anything's more than 90%, right? You can't get 90% of the people to agree on anything. So it's about as strong as rating as I can say that, we are still moving higher. Now, since that writing, I've had additional comments that say I am concerned that this may be a little bit of a failed breakout here, but that only affects the daily chart, the midterm area. It does not affect the long term. Now, you guys can see the little arrow here, correct? You guys can see this arrow? Yes? Because I want to point with it. I'm not sure you can see it or not. I don't get to see the charts here. Can you see the arrow? Yeah, okay. Thank you. Thank you. All right, good. There's a little delay in the sound here, obviously. So go back to before these 3 green bars. Go back to here. Here was the big debate. The long term is still up, up, up. And I'll show you why in a second. It's because of this picture. That's the weekly chart. The long term is up. There's nothing to talk about. The midterm picture, the daily chart, because at this point in time, the weekly chart had this little separation, which is not a big deal. And, whoops, I'm sorry. And the daily chart had this gap up and huge red bar after 97,000 days up. This put a little top in the daily chart. And the question was, were we going to stay sideways between this area here, that about 146 area, and 140, 140? Or were we going to complete the trip down to 136? That was the debate that I talked about for a lot of the times. Now, that does not really affect the day-to-day so much, and it doesn't affect the long term, because the long-term pattern would not change. If we come down to here, the long-term big picture months from now we're still higher. The question is, does the market need a rest where it's going to come down and recheck these areas? The fact that it did not do that shows part of the bullishness. And once this day came here, 1, 2, 3, this was kind of the key. Now, I'm going to talk about it. I got the market wrong one day in the last 3 weeks, and that was this day right here. I have that on a slide coming up. But once we did this, the next question is, okay, is just this a little bit run back to what we call a stage 3 type of a top, or is it going to be the next move higher? So you wait for your next confirming move, and that came right here this day. So the market was written this day when we had this bullish activity going on. Remember, this is a green bar over a red bar, which is very bullish, happening near the top of this consolidation. So that's where all the bullish bias comes from. It's a new move for the long-term picture. It's a new move for the mid-term picture, and it keeps the daily bias bullish every single day until we change that. All right. Okay, so there's your market analysis. There's where we are. Now, there's a little caveat, a little asterisk. There is a little problem going on as of today's close. And some of you can maybe sense what it is already. And again, it doesn't change the long term. It may change tomorrow's intraday outlook, and it may change the daily outlook. But there's a big problem that we have to look at tomorrow. So what matters and what does not matter? Here's what matters. Price action is the total summary of the market. Absorbs everything that there is, news-wise, and everything that can be predicted. The only things that can change a market are what we call shock value type of news, things that the market has in no way contemplated. What is that exactly? We're not sure. We saw the market absorb several terrorist acts, even going way back to London several years ago, which was a huge terrorist act, to recent terrorist attacks, and not really care about it at all. So the market has absorbed a certain amount of that. What would be the extreme shock value news the market has not absorbed? Well, the example I always give, if you wake up one morning, you see pictures on your TV of a mushroom cloud over Washington, D.C. or something. The market has not absorbed that. I just know it hasn't. In between, we don't know. So this is where people often goof, is because they're looking at news on a day-to-day basis thinking, oh, bad news, the market has to drop. You'll always be wrong doing that. There's two ways that tops form. Two ways that tops form. The easiest way, the best way, is the way that it formed in both 2001 and 2008, which is extremely predictable. I was there to make the call both those times. Yes, I've been around that long, even 2001, and made it literally within 2 days. And that is through exhaustion. It's through irrational exuberance, as Greenspan called it, just complete price exhaustion, where you are literally left with no buyers. That literally is what happened, because there's a finite number of buyers, and it's fairly predictable when that happens. The more difficult way, which you don't want to see happen because it involves a lot more analysis and a lot more difficulty, is when you have a transition in prices that is just brought about by what you would call a slow exhaustion, by just a slow changing from buyers to sellers over a period of time. It's still recognizable, but it's much more difficult to recognize. We have not had to deal with that on a big scale in a long time. Every big major top, I'm talking about the major tops, weekly, monthly charts, have been exhaustion type tops that have crashed the market the last 2 times. We are not there, and until we're there, it is foolish to think we're going to be there. This is the weekly chart, and this can go on forever. It won't go on forever. Yes, the day will come that we're going to be talking bearishly on the big picture. Yes, the day will come we'll be talking about getting rid of your long-term portfolio, but until that day comes, it's bullish and it's higher. And don't ever forget that. And don't listen to people on TV that are talking for various reasons. The monthly chart always looks extended. I didn't put a monthly chart in here. It will always look extended, just the way it is. Extended does not mean it's lower. Most people in the news are 2 years early on the top. Okay, here's a big one for you. Fund managers. You hear fund managers saying, we're near the top. We're near the top. Why do they say that? I doubt anybody's going to give me a serious answer, but why do fund managers say it? Think that about it. You're on CNBC, you're listening, you got this guy and he's got the XYZ fund, he goes, oh yeah, we're thinking there's going to be a pullback here, blah blah blah. The fund manager who's saying that, is his fund 100% invested in the market? Think about it. If he's on TV saying, oh, there's going to be a pullback here, if he's convincing the public that it's time to sell some things, He doesn't want the market higher, right? He's not 100% invested. You see, it's kind of reverse. They're not on to help you. They're on to promote their own good in a legal, legitimate way. So he can come on and give his market view. When you hear a fund manager come on and say, "Oh, man, the sky's the limit. Jump in while the jumping's good," what is he doing behind the scenes? For fund managers that are telling you, there's no stop to this market, jump in with both feet, nothing but clear water out here, what's he doing? What he's doing is he's 100% invested already. He wants the market to rally all that it can because he's going to be starting to sell. So you have to be very careful what you listen to. The people on TV are not trying to help you. They're trying to help themselves. And it's always been that way since the beginning of time. More money is lost shorting a strong market than any other way. People that think just the top is here because, we've been up too much, we've been up too long, because the book-to-bill ratio is too high, because Trump's a jerk, because Congress stinks, because Hillary's got a book out, whatever it is, and they're always wrong. It's not what causes the market to top out. And remember, if you get in an argument with somebody, the bearish person always sounds smarter. He can justify every reason in the world why prices cannot go higher. Everything from PE ratios to the economic outlooks and this and that. But you know what? He's never right. He has everything on his side except money because he's losing money every day. One day he will be right, but it is usually way in advance that the bears are talking. What does not matter? What does not matter in price action, what you should never look at to try and determine if the market's going to rally or fall, is most everything that you've been told to look at or that most people do look at. Okay? Elections do not matter for the most part. They do not matter. The news, for the most part, doesn't matter. Daily economic numbers do not matter. And I know some of you right now, if you've been through this, you're saying, I know that's the truth, and I'm glad to hear Paul say that. Some of you saying Paul had too much whiskey before he came on the mic because that makes no sense to me. But it really is true. I want to explain to you for a minute why we're all conditioned to think the news matters. It's because you listen to TV. It's because you listen to the people who explain things after the fact. See, here's what happens. One day, somebody from the Fed comes out and says that interest rates are going to go higher, right? And the market falls that day. So when the market falls that day, the news commentators, they go down their list of news that day and they see, okay, good earnings here, book-to-bill ratio good. Oh, wait a minute. This FOMC chairman said interest rates going higher. So what is the news story that day? The news story is, folks, stock market fell today because FOMC mentioned a raise in interest rates. And everybody goes, oh my gosh, understanding the market is relatively easy because you just have to listen to the news, and when this bad news comes out, that puts a top to the market. I got it. But let me take you through, and this is true, and actually going back a ways, this was exactly true 7 days apart. The FOMC comes out and they say, oh, interest rates are going higher, and the market rallies that day. What does the commentator say? You know what the commentator says? The commentator goes down their list of news and they say, oh, DuPont had bad earnings today, citing global uncertainty. So what do? They get on the mic and they say, oh, stock market suffered today because DuPont cited global uncertainty in their products, and that spread throughout the market. They don't tell you that they also said they're going to raise interest rates, but nobody cared about that. Does this make sense? Am I even scratching the surface if you start out not believing me? Because if you really understand this and you listen to this day to day, it is so clear and obvious. The news is just there to justify what prices do. Still don't believe me? What did and I mean virtually every analyst say would happen if Trump won the election? Right? Don't even need to tell you. You know what they said. And they were right for exactly 2 hours. What did they say about Brexit? Thank you, bold trader. What did they say about Brexit? Completely wrong. Completely just wrong, top, bottom, left, right. You know what was right through the election? You know what was right through Brexit? Price action. The market is telling you what is happening because it's buyers and sellers. People come on and say whatever they want to say, but it's who is buying and who is selling and who has the most money and where's the money going. And that's what prices tell you. Reading a chart is like learning a foreign language. It's not hard to do. To some people, it's like just like a totally foreign language. I love the analogy. See, when I teach, I don't like to teach just strategies because strategies are like Cracker Jack box pre-made little things, and they're nice, they're neat. You pull out your little box, you use it, it works, you say yay. But if everything's not just right, what do you do? See, I like to teach what I call the language of charts. And I love the analogy of learning a foreign language. Is a 5-year-old child very smart compared to an adult? Answer, you don't have to answer for me. The answer is no. I mean, they may be very bright for a 5-year-old, but they're not very bright compared to an adult, right? But if you're the typical, let's say, American, and when you went through school, you took Spanish as your second language, and you never learned a word of French, and you went on a game show, quiz show that was done in French against a French 5-year-old child, who would win? The 5-year-old would blow you away because the 5-year-old, even though they're not terribly smart, they know the language of the game. The game is in French, you're lost. And it's the same thing looking at charts. If you don't know the language of charts, you're lost looking at them. I remember the day I was lost. I remember thinking I knew charts. This was 18 years ago, thinking I knew charts. And one day I had a lot of money on the line, and the charts did. And I was in oil stocks, and they blah blah blah. Charts did blah blah blah, and I had to make a decision to exit at what was a break even. I was at a terrible loss. Exit at a break even, and say I'm happy, or stick with it. And I sat there and stared at those charts, and I realized I didn't have a clue what I was doing. Because when the pressure, have any of you ever felt that way? Ever have you had that? You think you know what you're doing, you go from day to day, yeah, that's fine. And then when the pressure's on, you say, I don't have a clue. And I went out that next Monday. That was a Friday after that next Monday. I signed up to get an education. That was with Pristine at the time, way back then. And it was the best thing I ever did because I realized I was clueless. So news justifies everything, but it's really comical when you believe it. There's a saying that we have that in a bullish market, good news is great news and bad news is good news. And that's the way it works. And in a bearish market, of course, bad news is terrible news and good news is bad news. That's the way it is. So to me, the absolute best method of trading, intraday, midterm, long term, is to go to a deserted island with a set of charts and don't listen to anybody or anything. Anybody who's asking people in a chat room for their opinion of where the market's going is novice 101, guaranteed to lose money. I made my point. Intraday analysis is even clearer. What time are we at? We're at 4:58. Good. All right. So we're flying along here. I'm going to be done early. Let you guys go early. Again, make sure you if you want an invite to a real seminar tomorrow. It's not. I don't do salesy stuff. Matter of fact, what I do sell is never going to go on sale ever. Never. There won't be any sales slides. It's never going to happen. I have a real seminar tomorrow that people who paid for are going to attend that I'm inviting people to come to. So I'll tell you how to get to that in about 10 minutes, 15 minutes, and then you can go. If you want to hang around and hear what I do day to day, you're welcome to do that, and I'll be done with that before 4:30 even. Intraday analysis is even the area. Examples, spot on market management. Intraday analysis is so much easier because I think I have it on the slide right there. You trade intraday. Market analysis. First of all, why is it market analysis critical? Market analysis is critical because it determines the movement of most stocks, period. There is a saying, rising tide lifts all boats. It's absolutely true. You have to understand a few exceptions. There are naturally some things that are counter market. There are some things that are independent. But for the most part, if you're going to play the typical stock, the typical tech stock, and you're going long on a day the market is falling, you're going to have a heck of a bad time. So you need to understand and use the market as your backdrop. And number two, some of you may be trading the market, the futures, the leveraged ETFs. And obviously, if you don't know where the market's going, you don't know what you're doing. You analyze the market no different than you analyze any stock that's out there. It's the same exact thing. Excuse me, I need a quick sip of water. Uncertainty rises geometrically with time. What do I mean by that? Take a simple real life example. Everybody, it's 5 o'clock Eastern time. Where are you going to be at 6 o'clock today? All of you, 80% of you could probably tell me within 100 feet where you're going to be. And all of you could tell me what city you're going to be in, right? It's a 1 hour outlook. It's easy. There's a limited number of possibilities that can happen. You know what they are. You can be very accurate telling me where you're going to be in 1 hour, correct? What if I said where you're going to be 10 years from 6 o'clock today? All of a sudden, whoa. You not only can't tell me the room, you maybe can't even tell me the city, right? The market's really no different. I mean, we have to take things a step at a time. I can never right now say, it's the people question ask, where's the market going to be 5 years from now? Nobody in here knows. Now, I can tell you where it'll be 5 years from now every step along the way. And I don't mean waiting until it falls to say it fell. I mean, along the way, I can tell you ahead of time, but there may be a 1 month warning, there may be a 2 month warning, but you can't just say 5 years from now what's going to happen. Nobody has that ability. You can look at long-term charts and make some assumptions, but you can't really predict that. So intraday can become very pinpoint. It become actually, I hate to say the word, but almost downright simple. Okay. Now, I've done this type of talk many times where I come on and talk about the market and the recent analysis. And I always want to talk about the last 3, 4 days. It's just a rule I have because I hate people that come on and say, well, 6 weeks ago, here's what I said would happen and look what happened. I mean, who cares? I do this every day and I am spot on almost every single day. The last 3, 4 days have been so simple, though, it's been pathetic. So I'm not even going to do the normal thing I do, which is to pull up a chart and say, what do you think is going to happen? And here's what I think is going to happen, and then go back and say, here's what the letter said happened, and boy, it's right on. This was just very simple. It's very simple. It's just a grind up every single day is what's going to happen. We'll probably accelerate higher one day. And that's exactly what's happened. This is a 15-minute chart of the SPY over the last 1, 2, 3, 4 days. It's been a very simple talk. So rather than do that, I'm not going to waste your time. I'm going to kind of take a look at a bigger picture, some other stuff, take a look at a day that I was wrong and explain why I was wrong and how you can be wrong sometimes. Okay? And actually, I'm supposed to do that right now. Discuss the 3-day rally, why I was wrong. Okay. Here's the daily chart. I just switched from a 15-minute to a daily chart. This day right here, I was wrong. I was wrong. I said that it would be a small green day, a small narrow day, and it was a big day. Now, I wasn't dead wrong. I wasn't mean like I wasn't 180 reverse. What are you talking about? But that's pretty far off. I mean, if we're gonna have another big green day, I like to be on top of it and say, hey, there's another big day upcoming tomorrow. I actually did kind of say that for the third day, but the second day I was wrong. I said it'd be a very narrow day. You know why? I play odds, I play probabilities, I play statistics, I play chart patterns, and you know what? I challenge you to find this. 2 green bars this big on the daily chart, especially inside of a sideways pattern. This happens once every 3 years approximately. I went back and took a quick look. Once every 3 years you will see that. You get one big green bar like that, it happens a lot, and 98% of the time I made up that number, but a large percentage of the time the next day is a little narrow day. It's called a consolidation day. So this is just a typical thing, and I was fooled. The market just took off the next day and just went higher. So is there any harm done? No, there's no harm done. On days like that, I usually end up kind of flat-footed. I end up kind of, wow, what's going on here, looking around. It didn't change the big picture. The big picture is higher. It didn't change my midterm outlook. Midterm outlook is higher. Um, it just changed that one day to be saying, hey, I'm a little lost here. We're really flying higher. Okay. So there are times like that where, and I rate every day, I kind of rate the letter and give myself a grade and a 0 to 10. And it's been 10, 8 out of 10 days. It's self-rated, so it's very self-serving, but it's obvious. Everybody looks at it. Somebody can complain if they want to. And a couple of days was an 8, and this day I gave myself a 0 because it just was not spot on for what happened that day. So intraday analysis is something that is fairly simple to do. Here's a 15-minute chart again. Using all the technical concepts that you use and understanding common patterns and understanding the bigger time frame, what's going on. Every one of these days, yesterday in the room, this low, I called it to the 5-minute bar. People started thinking, oh, we're heading lower. No, we're not heading lower. That's the low of the day. I will do that most days. Say 70, 80% chance that's the low of the day right there. Some days I play it. Some days the odds aren't good enough to play it directly. I'll play it through a strong stock, playing relative strength when you think the market's at a low. Different ways to handle things. Okay, so there is intraday. All right, I promise you a quick little talk here about how you can beat the market in 5 minutes, and the same topic is what you should never do with your money. This is not a joke. People think I may be kidding. How you can beat the market in a 5 minute lecture, because I'm sorry, how is that phrased on here? How you can beat mutual funds in 5 minutes, right? Professional people that spend their life managing funds, I can teach you to beat them in 5 minutes, and it's not a joke. I'm very, very serious. Um, the vast majority of people don't get this. I believe in odds, not in hype. First of all, I want to distinguish. When I said this comment to the room the other day, somebody thought I was talking about financial planners. Financial planner, very good thing. Okay, especially if you're not familiar with the things that go into financial planning. You go to somebody, you say, look, I'm this old, I want to be able to retire. How should I take my money and divide it up between some safe stuff and blah, 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 so that when I retire, I'm guaranteed to have money to live from day to day, and then maybe I can have some speculative money to maybe get richer, right? That's what a financial manager does. Notice it says financial planner, very good. Okay. Now the question I'm answering here is when the financial planner says, okay, here's so much money you have, you can go play with. Go put it in the stock market, do what you want to do with it. Okay? That's what I'm saying now. To turn this over to a mutual fund is bad. Very bad. A matter of fact, very bad. Let me ask you guys a question. You go to a mutual fund. First of all, you have to search for the right fund. You spend hours, days, weeks doing that. You pay the fund money just to take your money. You pay the fund money to manage your money. How many of the funds beat the stock market? I want some guesses here. What percentage of the funds beat the stock market? How many? 90, 80, 50, 20, 15. How many? What percentage of the funds beat the stock market? And this actually is a very good time to be talking about this. What percentage of the funds beat the stock market? Any guesses? Come on, take some wild stabs out there. I need a sip of water anyhow. I'll give you 30 seconds. How long? How many? What percentage of funds beat the market? 20, 10, 30. You know, those are great guesses because for years I've done similar talks and I've always used the number 15%. Now think about how bad that is. You're giving your money, you're paying somebody to take your money, you're paying them to manage your money, and 85% of them do not beat the market. And you know what? It's worse than that. You can read this article yourself. I don't know if you can click on that or not, but if you just Google Market Watch, actually it's an S&P. It's a Market Watch report, and they kind of analyze a report done by the S&P 500. I'm sorry, by Standard & Poor's, not the S&P, by Standard & Poor's. And you can go read the article yourself. It's one of the top Google things. You don't have to look hard for it. It's right out there. It's an S&P thing. It's very recently. Here's the summary of it. The picture that emerged once S&P did that was sobering to say the least. In the last 15 years, this isn't one select year, the last 15 years, 92.2% of large cap funds lagged the simple S&P fund index. The percentages of mid cap and small caps lagging were higher, 95 and 93 respectively. In other words, you'll do better. You'll do better than index fund 1 out of 20 times in picking the act. You can read the screen yourself. 1 out of 20 times giving your money to a mutual fund, you'll do better. 19 out of 20 times you'll do worse, right? And you're paying for that privilege. So wow, that deserves a wow, right? So if you want to beat mutual funds, the best thing to do is to learn price action. Okay, now most of you are going to say, I don't want to do that. It takes some time, probably got to pay somebody. Yeah, you do. And it takes some time. But so let's just say the armchair guy who just wants to say, hey, I'm bullish, I want my money in the market. Now, if you have made the decision, that you want to be in the market, now that's a whole decision to make, right? I'm not saying, understand, I'm not saying, I talked about this earlier, but I'm not saying right now, just always be in the market. There's times you don't want to be. But if you have decided for yourself you want to be in the market. In other words, if you're going to give your money to a mutual fund anyhow, who's going to try to beat the market, simply put it in the market yourself and you will beat it 95% of the time. You can do that literally for free. How do you do it for free? Well, get an account if you don't have one. And like every bank I'm at, Bank America, they send you a thing saying, open an account with us, we'll give you 50 trades for free. Okay, that's all you need. You don't need a hyperactive day trade. You just need Bank of America or somebody to say, yeah, give me an account. And you go to that account, and if you, when you want to get in the market, you buy the SPY, the SPY. It is bought and sold like a stock. It'll cost you nothing because they're going to give you your first so many trades free. You can buy or sell at any time of the day. You can get out any time of the day. And you're done. You're done. And you just beat 95% of the mutual funds. I know it sounds like I'm making this up, but I'm not. So when you want to be in the market, be in the market. And you know what? If the day comes you decide you not only don't want to be in the market, you sell it, you want to short the market, there's an equivalent three-letter acronym you can use to short the market if you want to do that. But of course, you have to make that decision. I'm just saying, when you give your money to a mutual fund, you have made the decision to be bullish or bearish or whatever it is. Right? So if you're going to do that, why try and thread the needle and get that 5% of the companies that do? It's not easy to pick the 5%, by the way. You think, oh, look at last year's winners. Well, last year's winners are almost always this year's losers because they got the hot stock, they got the hot commodity, they got the hot index, they got the hot whatever, and it was hot last year and it's a dud this year. And I know that you can look up ones that have good whatever year performance, but what matters is the year you're in. This year, what's it going to do? 95% can't beat the market. Okay? It's 5:12. I want to take 5 more minutes, and then I will stay here till 4:30 and answer any questions you want to answer. I want to invite you to an introduction to mastering technical analysis. This will be tomorrow. This is kind of coincidental. I didn't actually really plan this to be talking to you today and do this tomorrow, but it's the way it turned out. It is day one of a paid seminar. It'll be from 12:30 to 4:30, and you will get an invite tomorrow morning. Let me give you the link. As long as you are just on this mailing list, and there's no there's no trick, there's no credit card, there's no anything. As a matter of fact, did that go through, Kathy? There it is. I don't even need your name, just your email, and no, I don't sell your email to anybody. What will happen is that if you give me your email, you will be put on, what's this called, the free member list. You'll get a weekly report on Sunday for free. You will get a trial to the letter. If you don't want it, just email me back. I don't want the trial. And you will get invited to some special events like this. Okay? So as long as by tonight midnight, I'm going to pull the list at midnight and mail it in the morning, you will get an invite which will give you a link and a password to attend a 4-hour presentation tomorrow, which is part one to a paid-for class that people are paying $1,200 to be in. Okay? Yeah, but that's actually not just the website, Kathy. That's the actual sign-up form where you just got to put your email in there. It says first name, last name, email, but you just got to put your email in there. Okay? And if you're on the list, I will send you an invite to that tomorrow. Okay? And that's all there is to it. It's nothing but good information. That's all it is. Here's what I'm going over. Why we can do this today: manage our own money, trade, invest. Some terms we need to know: how to prepare for success, prices, markets, why they move, charts 101, how to place an order, and by the way, some of these things are topics that are rarely discussed anywhere, even in paid-for seminars. It's the reason I do this is because people in paid-for seminars don't really want to spend too much time talking about some of the stuff. They want to go on to the strategies and the language of charts. But yet some of the stuff is really important. How do you make money? How money is made? Share sizing and risk. It's talked about in seminars, but I really want to drive home some points that everybody should know, even if you're never going to take a seminar any other ways. Okay, and look out for some of the pitfalls. So that's what we're going to go over tomorrow afternoon. I have a hard time getting through it in 4 hours. But last warning, if you want to be there, you're welcome to come. And, anytime you want. You just unsubscribe if you don't want to hear from me anymore. I to the big group like what you're signing up for. I send an email about once a week. You get the weekly letter. It's usually all you get. This week there were two others because of this invite coming up to this thing tomorrow. Okay? Don't bother you a lot. You don't want to be bothered. I don't want to bother you. If you're interested, you'll come find me. What I So I'm going to go on here, folks. So I'm going to take the next couple slides and just tell you what I'm doing. You're free to leave. I don't want to sit here and bore you with any sales stuff. So it's not. I don't do salesy stuff. But a lot of you had asked me. Some of you emailed me when you got the invite to here and said, "What are you up to? What can I sign up for? What can I do?" I'm going to go over that. So you're free to leave if you want to. I'm going to call this officially done at 5:16. I'm done 14 minutes early, Kathy. And I'm just going to go through a couple slides real quick. What I do three simple things, very basic. As you know, I have written um, a lot of the seminars out there that are being kind of duplicated and copied. I'm not saying I invented technical analysis, but the original seminar Pristine I've rewritten several times, and it has been redone by me several times, and I redid it for this class. I have a couple classes I created about management and about gaps that I have enveloped into these three classes total. Everything I know that I think should be taught in classes or in the seminars that I teach. A trading room that runs every day from 8:30 to noon. I close it at noon. At least I stop talking at noon. I leave it open for some chat or comments. I'm usually done at noon. I want to be done at noon. I want people to be done at noon. I want you to trade 3.5 hours, feel like you're retired, even if you're not, and prove me wrong if you don't think that's the right thing to do. And I also have a market letter that goes out every morning at 8 o'clock. The market letter looks like this. It's cheap. It costs $97 a month. It costs half that if you're in the room. It goes through a detailed analysis of the market, like I showed you on a couple slides. It goes through watch list, long-term and short-term. It gives you educational commentary daily, and it talks about economic, and it gives the economic and earnings list. Your one-stop thing for the day. I see people who subscribe to and download information that have videos that talk for 30 minutes, that have nothing to say when they're all done. I signed up to two places for fun to see what's out there. I signed up to Bazinga. Is that the name of the place, Bazinga? I probably shouldn't say it. It doesn't matter. Nothing bad to say about them, but it was signed up to be your total morning prep, all you need. And I got a list of all this news that's coming out. That's all it was. It's nothing that's really helpful. You have to know what to focus on. And what I care about, the only reason I even put the economic things in there is to know when something is coming, to know when to expect a possible move in the market. I don't care what they are. I don't care what's said or what's done. DTS Trading Room. This maybe not be your usual trading room, what you're used to. I am what you would call kind of laid back. I'm not a micro scalper. I do things that can last half day, all day, multiple days. I do things that maybe have fairly quick targets for part of it because of the nature of the trade. But for the most part, everything I do is discussed well ahead of time. Watch lists are provided to you early in the morning at 9 o'clock that have the gappers for the day. I scan 1,000 stocks every day and pull out the top dozen stocks that I want to follow that day. The carry list from the day before. You're given this at 9 o'clock. I come on the mic at 9 o'clock. We go through the lists. We form a hot list. 95% of the stuff I do the first hour of the day has been discussed ad nauseum until you're blue in the face listening to me about the particular play. They are things that are generally playable by anybody who wants to play them. Yes, some things move faster than others. Some things don't. Some things have more difficult entries. That's the nature of the stock market. I can't help that. But it's not one of these places where, I'm saying I'm out of something before you're even in it. It's not the room at all. I go through and discuss and show you the charts, the description, the analysis. The watch lists are in front of you all day long. I'm on the mic talking the entire time. This is my room, my company. I do what I want. I'm on there talking to you the whole time. I sometimes don't even take more than like just a 5-minute break between 9 o'clock and 12 o'clock. And that's the way it'll be. It's going to be me. I have been involved, obviously, in many room formats over the years. Sometimes having a say, sometimes not having a say as to what should be done. I find without question that the best room has always been when there's a person in charge. I don't care if it's me or not, but a person in charge who knows what they're doing. not five people all screaming in the mic, yelling different things, dropping different plays, and you're left like in a daze with smoke around your head. Um, you need to learn and follow a mentor if you're not at the point already where you're comfortable with what you do. And if you are comfortable, there's no better place to be to get and share other ideas. So if you're interested in a room, I don't think you can find a better place. Um, the room is just simply profitable. It's been, I mean, the third week in the room. This was 2 weeks ago. It was closed one day, 6 hours worth of profits, which is I teach people if you're making an hour a day, you should be making a killing living. That's the way you have to be eventually. You may not on day one, you can't do that, but once you learn, develop your style, you need to be making your living at 1 hour a day. I'm always in the 1 to 2 category. We're open 4 days this week. It was a 6 hour week. This last week it was a 6.5 hour week. I might have the weeks backwards. Um, and again, it's not a ton of trades. Look, it's a couple trades a day. I'm not doing 20 trades a day. It's a couple trades a day, anywhere from 1 to 4 is what it typically is. I don't. I think I did 4 this week one day. This week I'm up. I'm up a couple hours this week. I have to take a look. I forgot. I did better today than I thought because I shorted GM today. Somebody in the room brought up GM. Shorted GM today. I can't break how many charts on the computer I'm on, but um, turned out it was just kind of a barely green day, and it turned out to be a nice day. So this is gonna be a good week. These are posted for you ahead of time. The analysis is given to you every morning. So if there's something you think is wrong, you tell me. I'll correct it if there's something you think that I didn't do right. Sizable targets on most things. The posts are out there ahead of time, or I'm typing the post as I'm screaming in the mic the best that I can, but it's very clear what I'm doing, how I'm managing it. Okay, so not your typical room. Yeah, Z Patrick, yeah, good question. I'm sorry, I kind of brushed over that. In R is a risk unit. Everybody is going to be risking a different amount of money. Z, you're starting out, maybe you're risking $50. So you're just learning. So if you had a 6 hour week, you made $300. Minus, this is gross, so it's minus commissions and minus if you had any slippage. If you're risking $1,000, you made 6 grand that week. Minus slippage, minus commissions. Okay, so it's a way of talking. In other words, everything I do is based on what I'm risking. You don't have variable risk. Every trade is set to risk a certain amount, generally speaking. So your target that you hit means that you've achieved a certain amount based on what you risk. Okay, that makes sense. And actually, I have. If you go to my website, Z Patrick, if you're interested, if you go to the free stuff page, there's an article there about understanding the R unit. It's a really, it's not just a way to talk about trades. It's an integral part of understanding trade management and how to share size. It's something I'll talk about tomorrow at the free thing, and it's something you can read about on my website under the free section. Okay, great question. All right. And the seminars, if you sign up to be there tomorrow, I'm sending a email tomorrow, one of the ones I don't like to do very often, but it's just going to outline the seminars I'm doing, the seminar policy, the benefits you get. You have unlimited retakes. You have disposal to me. I don't want to sit here and be at your disposal, but I want you to succeed. And that means I have to be able to look at your trading plan when you're done with it. I have to be able to review your trades if you're having a hard time. I want you to succeed, and that's what I'm guaranteeing you, is that I will be at your disposal to do that. Um, I enjoy this right now. It's a perfect time in my life to do this for the next 4 years. I really enjoy working with traders. I have had such an incredible warm welcome by so many people. I am floored by how many people have been signing up, have been there to be with me, because I have a fairly limited number of people that I can even contact initially, and the word is spread. I'm just thrilled. So that's it. If you have any questions, feel free to let me know. Otherwise, at 5:24, I will be done 5 minutes early, and Kathy will love me. I don't know if you have something coming up next tonight, Kathy, or not. You want to post that out there? Feel free if you people are hanging around for somebody else. Do you have any questions? If not, you know where to reach me. As I said, for any of this stuff, when you want to sign up, sign up. I will never have sales or specials because I don't want some people feeling gypped, that they signed up and then there's a sale. I don't want you feeling you should wait because there may be a sale coming. I don't want you feeling like you got screwed. And you know what? When you're ready you will sign up at any price. And when you're not ready, you won't sign up at any price. The day I was ready, I would have paid anything to get an education because I realized I was an idiot. Um, so whatever it is you want to do with me, you're welcome to do. If you just want to hang on the free list and say hi every once in a while, that's great too. So I'm here to do whatever you need to do to help you, and I'm enjoying what I'm doing. Trading, helping the people on be with me. Great thing. All right, everybody. I don't see any questions. You've been a quiet group. Nice group showed up. I'm glad to see you all here. You're still all here. I'm thrilled to see that, but I'm done. So either in the next 30 seconds, say goodnight, ask me a question, or I will say goodnight for good and we'll be gone. And I'll see you tomorrow, maybe at the seminar if you want to show up for that, okay?
Well, they gotta be kind